Hello everyone, and welcome to this session of FXStrategy.com. Today we're going to be looking at a very good practical example of how the MACD indicator works. We're going to be looking at the Japanese yen. It's about 4 or 5 weeks since the earthquake hit in Japan, which caused a major depreciation of the currency versus the other cross currencies. Now if you look at the example here with the Canadian dollar versus Japanese yen, it's important to note that the Japanese yen is listed second. So this the uptrend that occurred over the past few weeks and months represents a depreciation in the Japanese yen versus the Canadian dollar, or if you like to think of it as an appreciation of the Canadian dollar versus the Japanese yen. Now if we look at the MACD indicator here, I'm going to assume that you have some knowledge of how the indicator works. If you don't, please check out our technical analysis section. There's a very good article and accompanying video which explains in detail how the indicator works with some practical examples. So please refresh yourself on that video if you don't understand how the indicator works. If you do, you'll know that this red line crossing over the lower red line from above indicates that a trend, an uptrend here in this case, has lost momentum, and that the next trend the prevailing trend might be down. So a trader might have been looking to enter in at this position and to short sell the Canadian dollar, Japanese yen. What's interesting is if you look at other cross currencies involving the Japanese yen, we'll start with the AUD, the Australian dollar, versus the Japanese yen. Once again, I'll add in the MACD indicator, and you can see the exact same pattern occurred here with the line. This is the exponential moving average with the shorter time period. It's losing momentum when it's crossed over the exponential moving average with the longer time period. So once again, a very good sign to short sell this particular cross currency. Let's look at two more quick examples, one being the US dollar versus the Japanese yen, which I always have trouble locating. There it is there. Add in the MACD indicator again. This time I'll make the line blue for the exponential moving average that is for the shorter time period. Once again, an almost identical pattern. And finally, if you look at the Great British Pound versus the Japanese yen, click in Add, and you'll see the same pattern emerging again. I wrote an article about this at the time when these indicators began to cross. I managed to short sell, and I've made a small profit so far. It's probably not too late to get into this particular pattern. It's a very good example about when a particular currency, in this case the Japanese yen, the pattern is the same with at least 4 other cross currencies, so it's really confirming the pattern, and it's a very strong trading signal. Happy trading.